In a rare moment of bipartisanship, Democrats and Republicans decided to get together to help the most beleaguered and helpless people in America. The banks. Wait, what? The banks? Yes, those people who can hardly agree on an effort to fund the government or give people health care have decided to put aside their enormous differences to help Wall Street firms. Because, of course, Politico reports that a group of senators on Monday rolled out a rare bipartisan agreement years in the making that would relax a number of banking regulations enacted after the 2008 financial crisis. You know, because deregulation definitely wasn't the cause of the financial disaster. How quickly they forget. Now, the deal was driven by Senate Banking Chairman Mike Crapo and a handful of red state Democrats who have long argued that the rules were stifling lending for their rural constituents. Now, let me go back for a second. I don't know if it's Crapo or Crapo, but I'm definitely going to call him Crapo, okay? Because I'm a fucking child. Anyway, now, so these red state Democrats, right? Here come the corporate Democrats working together with the Republicans in order to save the day for the banks. Wonderful. Now, this group included Joe Tester of Montana, Joe Donnelly of Indiana, who are also all up for a re-election next year. Mark Warner of Virginia was also there, and I'm not sure, but I would assume Joe Manchin was also probably there. And, of course, Heidi Heitkamp. Now, Politico explains that the compromise would ease regulations on small community banks, as well as several larger lenders that have been subject to stricter oversight because they have over $50 billion in total assets. Hey, look at us. We're small, too. We're small banks. We only have $50 billion in assets. Not millions, billions. We only have $50 billion in assets. We're so small. These regulations are crushing us. They're choking the life out of us. Really? Really? Oh, okay, man, that's your story if you're going to stick to that. Now, Senator Sherrod Brown, of course, of Ohio, he's the top Democrat in the Banking Committee, was, I think, the only one that opposed this. Because he said it rolls regulations too far back. But unfortunately, with 9 Republicans, 8 Democrats, and 1 independent senator signing on, the package had a significant head start on the way to advancing through the Senate. Heitkamp of North Dakota, who, by the way, is being primaried. Everybody check out Dustin Peyer, who's running against her, said, quote, "Our bill is an example of how if Democrats and Republicans can put partisanship aside and work together, we can reach real compromises that support the country." But wait, how does this actually support the country? Well, this is more financial deregulation. It's more of the same crap that caused the financial crisis in the first place. There is a reason these rules, these requirements, were put on financial institutions. All this shows is that when Democrats and Republicans come together, it's basically to benefit their rich donors on Wall Street, which is no surprise because, again, look at where the money is coming from. According to Open Secrets, the finance industry has given a total of $370 million so far in lobbying in 2017. Is it any wonder why these politicians are now pushing for more deregulation? I can't tell. So, okay, so here's the thing, right? Now, if you can tell, Politico is literally slobbering all over the idea that it's bipartisan. Oh my God, look at how bipartisan this is. Oh, both sides want it, so it must be good, right? Finally, both sides come to the table to help the American people. Really? Really? No, look, part of it's not their fault, right? Because think about, like, this is the way people in Washington work, right? They've got this bubble, right? And the Washington press is in there as well. And they're like, oh my God, the people say they want bipartisan efforts and they want the two parties to work together. And look, there's a lot of polling that actually does suggest that, right? That Republicans want to work with Democrats on policies to actually help them. The problem is that this is not policy that actually helps them. They think that deregulating the banks and, helping gigantic corporations, though they both think that's a fantastic idea. They're so disconnected from regular people. It's not even funny. Okay. And look, both Republicans and corporate Democrats and their donors despise regulations like Dodd-Frank. So look, there's nothing that's stopping these corporate Democrats from supporting more deregulation. And guess what? That deregulation also helps the Trump cabinet. In fact, Treasury Secretary Steven Mnuchin said, quote, he's very, very supportive of the agreement, which he praised as, quote, a bipartisan proposal, which I think is terrific. Oh, look, it's bipartisan, so it must be good. Quote, our biggest focus is making sure that community banks and regional banks can grow. Mnuchin said at a Wall Street Journal-sponsored event on Monday night. Now, the agreement, which is released in summary form, would ease mortgage rules for small lenders, attempt to simplify their capital requirements, and let them escape the Volcker rule. The package would also require credit bureaus to provide customers with one free credit brief per year and shield veterans from having certain medical debt from appearing on their credit reports. So that's some of what it does. So in response to that, well, how about we institute a system where nobody has medical debt? Why don't you start working on that, Congress? Instead of these changes that are basically a Band-Aid on problems, while also allowing these banks that are fairly large, I mean, $50 billion in assets, right, escape capital requirements. Now, Politico continues, one of the biggest proposed changes to Dodd-Frank would benefit several banks that have been subject to stricter oversight and stress testing requirements because they have more than $50 billion in assets. A group of the banks and credit card companies branding themselves as the Regional Bank Coalition have been lobbying Congress to scrap the asset trigger and instead have regulators tap banks for stricter oversight based on activities. Instead of that approach, senators who put together Monday's agreement would raise the $50 billion threshold to $250 billion, a move that would benefit banks such as SunTrust and Regions, but not bigger firms such as U.S. Bank Capital One or larger global counterparts. Now remember, we are talking about billions of dollars here, okay? That's still an enormous amount of money. From $50 billion to $250 billion, that's still an enormous amount of money. And if they fail, which is what these stress tests are actually put in to try to prevent, well, and capital requirements, then that's still an enormous part of the economy that has gone under. Again, these banks need to be stress tested because, if you can remember, it wasn't just the big banks that failed. Yes, they failed, and it cost trillions of dollars. But these big ones, I mean, the small ones also relied a lot on the big ones. All these banks were intertwined. And so when one fell, they all kind of fell like dominoes, okay? And it's because they were able to lend beyond their capacity. It was a chain reaction, right? One bank fails, and there goes the next one, and the next one, and the next one. Instead of deregulating banks, maybe we should be increasing regulations on banks, as well as maybe split them up and do both investment banks and commercial banks. I mean, think about it. If you have a problem with banks not lending, which is what they're saying, well, okay, you designate commercial banks whose only purpose is to lend to small businesses and individuals. Whereas your investment banks, they can go ahead and gamble on Wall Street. Separating them, instead of allowing them to be in the same institutions, well, it incentivizes these banks to only think about investment instead of lending to small businesses. You see what I mean? But anyway, instead, like I said, we have a system that does both right now, and unfortunately, most of it's investment. So, will it pass, the bill? Well, given that it has the blessing of corporate Democrats, it's actually far more likely. In fact, a spokesman for Minority Leader Chuck Schumer said he looked forward to reviewing the agreement. So now we have Chuck Schumer that's also on board, or looking like he's on board. The guy's never met a bipartisan agreement he didn't like. So watch out. Oh, look at us Democrats. We're so reasonable, right? We're deregulating Wall Street at a time where Wall Street is incredibly unpopular. Have you learned nothing, sir, from this election? Look, one of the reasons that Hillary Clinton lost is because, number one, she was so tight with the banks. When you run against the banks, when you run against big corporations, it turns out that that might actually help you win. Just saying. But here we have the corporate Democrats cozying up right to them, man. And that's the game that's played here. Hey everybody, thanks for watching this video. If you want to see more like this, please hit the subscribe button below. And if you want to support truly independent progressive media, please consider becoming a patron at patreon.com/TYTNation.